like 6 videos to go back on. Hopefully you've already started though. Hopefully you've already started, because I think it'll be a lot if you are trying to do it all last minute, you know, especially if you haven't been practicing. But so you'll see also on my suggested solutions, I'll share these with you end of day. I think you guys have seen that I've shared the 2023 and 2022, right? So I'm going to share with you the 2019 and then also the 2021 by end of day. All right. Now, what's interesting, I don't know. I have 2021 replacement test. I have 2021. Then I have this 2021, and they're all different. So, but I guess that's an advantage because that's more practice for you guys. So I just want to quickly display. Or is it already displaying? Okay, we already have it displaying. So this is the 2019 paper, right? The actual question paper. So I'm just going to split my screens. But if you guys can't see, just let me know so that we can obviously switch off the yeah, sure. Let's do that. Yeah. Okay. So I'm hoping you guys actually took the time to go through it because I'm literally just discussing the answers. We're not actually doing the exercise. So obviously this would be of much more value had we been doing the exercise. But then, you know, it is revision, and at this point the questions shouldn't be too hectic, but the real challenge should be, or the real task should be building your exam or test technique. Can you guys see? Okay, so it's fine. We'll remove the question paper. The only thing that I wanted to really highlight is that if you follow that link, it'll take you to the actual question paper on the database. So if there's anything that's like, but the questions are here, so that should still make your life easier. So here, going straight to the required first, here they are saying, prepare the journal entries pertaining to the sale of the vehicle on 1 January 2019 in the general journal, okay, of the company. Journal narrations are not required, okay? So I have left them there anyway because at least now you know what they should typically look like. So here basically they only want us to record the disposal. Can you see that? Because here they said the sale of the vehicle on 1 January 2019. Can you see now? Or is it, should I zoom in a little more? You can see. Okay, all right, no, that's fine. So here we quickly go through our information. It says the following information has been taken from the books, all right? And it says financial year end, 28 February, okay? And they are not a registered VAT vendor, so we can ignore that, okay? The following balances, among others, appear in the trial balance 28 February 2019. So there we have our vehicles, we have accumulated depreciation on our vehicles, we have land and buildings, and they're non-depreciable assets, the land and buildings. During the year, a new building was purchased for 450,000 on credit, okay? The transaction has not yet been recorded. Very important that we take note of that. It has not yet been recorded, okay? Then it goes on to say, Vehicles are depreciable assets, okay? The company depreciates their vehicles at 10% per annum according to the diminishing balance method, okay? Very important. Then it just goes on to tell us on 1 September, a new vehicle. So on 1 September, a new vehicle was purchased on credit from Above Motors for 430,000. This transaction has been recorded correctly. It has been recorded. Okay. Then it goes on to say, on 1 January 2019, a vehicle with an original purchase price of 440,000 and accumulated depreciation of 83,600 on 1 March 2018 was sold on credit for 350. Okay, this transaction has not yet been recorded, and that's when they then went on to give us the required to say we want you to journalize, right, the disposal of that asset. So if you quickly draw your timeline, I don't think I actually drew a timeline, so let's do that so we can see what's going on. The disposal was only a vehicle, so maybe let me use a different color. I think I have too many windows open here because it's starting to freeze. What else can I close? Did I save this? Okay, let's see how it goes. I think we'll be okay now. Oh, there we go. All right, so timeline. Right, our year end is 28 February 2019. Listen, so the beginning of our financial year is 1 March 03 18. Okay. What happened in relation to vehicles? Okay. On 1 January, which is just here, 2019, so that's 1 January 19, we sold a vehicle. And we sold it for 350,000 on credit. Okay. Then what also happened? We know we bought a vehicle. Or maybe let me finish with this vehicle that we sold. What else do we know? We know that the accumulated depreciation at this point, 1 March, was 83,600. Okay. Right. And the purchase price for this vehicle, cost, just going to put it there because they didn't tell us when we bought it, is it? So I'm just going to put it there, 440,000. Okay. Then, what else do we know? We bought a vehicle. But when did we buy this vehicle? We bought this vehicle on 1 September. Maybe let me use a different color. So 1 September would be somewhere here. 1 September. Um, 2018. Okay, and that was for the value of 430,000. I'm just going to put a B for bought, and that was on credit as well. Okay, so from here to here, how many months is that? September, October, November, December, January, February, 6 months. 6 over 12. Then this vehicle that we sold on 1 January, we basically didn't have it for 2 months of the year, right? January and February, because our year end is February. So this, obviously, that means that this, let me do it in blue, from the end of our last financial year to the point where we sold it, that is then 10 months, 10 over 12. Okay. And remember, what they want from us is to record the disposal. Remember, the question says, prepare the journal entries pertaining to the sale of the vehicle on 1 January. Okay, so the next thing that you need to do is, we're basically recording the disposal, isn't it? Next thing you want to do is to do your calculations in terms of depreciation. Okay, and that we have already done here. So again here, just writing down the key information, you'll see the cost price, see the accumulated depreciation. We know it's 10% on diminishing balance method for all our vehicles. And then obviously the selling price was 350. So we calculate our depreciation. Here you can see, you would obviously use your timeline to assist you with this. We had all the depreciation, accumulated depreciation, you can see the formula there, was 83,600 times 10% times 10 over 12. So you're seeing where we're getting all these figures from there. So then your depreciation is then finally 29,700. But we know at a disposal, we also need to know did we sell for a profit or a loss? So we might as well calculate that. But to calculate that, we also need to know what was our accumulated depreciation. So all this time we've had 83,600 depreciation on the asset as of 1 March, isn't it? But then we also have that depreciation that took place before we sold, which we just calculated now. So our total accumulated depreciation is 113,300. Happiness there. Then we say, okay, the carrying value, the 440, the cost price, minus your accumulated depreciation gives you a carrying value of 326,700. Okay. Then we said, but we sold for 350. So already we know that we've made a profit, okay, because we sold for more than the carrying value, isn't it? Okay, so now we've done all our calculations. Now we can journalize. Okay, so we go back to our process. Remember, this is a mid-year. It's a mid-year disposal because we disposed 1st of January. We didn't dispose at the end of our financial year or at the beginning. So step number 1, as usual or as always, we know it's remove the cost price. So you can see here, we're debiting asset disposal and we are crediting the vehicles because we're removing that cost price. Again, they said no narrations, but I'm just doing this for your benefit. So don't waste time with that in the assessment. Then step number 2, we know when it comes to a mid-year disposal mid-year disposal, we know we have to calculate the depreciation that happened in the financial year for the period that we've had this asset. So we say, okay, depreciation 29,700. We saw where that came from, how we calculated it. Then we know when we have depreciation, accumulated depreciation is obviously then affected. So we've credited that. Okay, happiness there. We return to our usual steps. Next step is obviously to remove accumulated depreciation. So here you can see, again, we've added all the depreciation that has taken place on this asset. They told us about the 1st of March being the 83,600, and then obviously we have the 29,700, which we calculated within this financial year, bring us to the total, which we had already calculated of 113,300. Okay, so we're debiting asset disposal because we're removing that. Sorry, this shouldn't be equipment, this should be vehicles. Let me quickly change that. Okay, right. So we debited that and we credited asset disposal. Then we sold on credit. So obviously here we have a debtor. Okay. Now debtors, usually we use it for the the selling of our trading inventory on credit. But if they don't tell you who we sold to, then you can just use debtors. It's fine. In fact, we do that a lot also in your textbook. Then asset disposal is obviously going to be credited. That is the recording of the sale. Then the last step, we need to record that we made a profit or a loss on the disposal of the vehicle. And as we established earlier, we actually made a profit of 23,000. So that was How many marks? 30 marks. Well, this is part 1. They then went on to say, prepare the asset disposal account in the general ledger. This should have been easy for you guys if you are doing this, because you're literally just copying and pasting what you've already done, just putting it in the asset disposal account. So we know, okay, we first transaction, we debited the asset disposal account because we were reducing or removing the cost of the vehicle we sold. So there you go. There's your vehicles and 440 on the debit side. Then we know we had to remove the accumulated depreciation. That's the next transaction that affected asset disposal, isn't it? So the total accumulated depreciation on this asset was that 113,300. Happiness there. Then we now need to record the sale. So we know debtors is going to increase, so we debited that, and we obviously credited your asset disposal, 350,000. And then we made a profit on the sale of the asset of 23,300, which we saw earlier. So we're crediting the profit on sale of vehicles, so we're obviously debiting your asset disposal. Makes sense? So again, if you want to quickly check, did we do the right thing? You see your debit and credit are equal. So we are happy. Okay. So that was the second thing they asked of you guys. The third thing, hey, this is where things got a bit more interesting. All right. So here they did a brilliant job of testing your knowledge on Learning Unit 3. They did a brilliant job. So here under point 3, they say, complete the note to the financial statements. Provide your answer books relating to property, plant, and equipment for the year ended 28 February 2019. So, which assets did they give us? Okay, we know there's land and buildings there, and there's vehicles. Those are the only 2 assets. So land and buildings, they told us, is non-depreciable. Okay, so what did they do? What do we need to do there? Land and buildings was 950, isn't it? And so that means that there was no change in the value of land and buildings because it doesn't depreciate. And this is the small balance as of 28 February 2019, isn't it? So basically, yeah, yes, that's right, 28 February 2019. But I forgot this one thing that they mentioned within the question. During the year, a new building was purchased for 450. Can you see that? And they say this transaction has not yet been recorded. So if it has not yet been recorded, is it going to reflect in land and buildings? Is that 450 going to be included in this 950 if it has not been recorded on the 28th? It's not. Okay, so basically they're then obviously telling us that the cost of our land and buildings at 29 February 2019 should then be how much? It should be the 950 plus the 450, which is going to give you 1,400,000. So here basically they were making us to work backwards, okay? So here you've got we know there's no accumulated depreciation, there's no depreciation on the land and buildings, so we have a carrying value of 1,400,000. Okay, then we know we did have an addition during the course of the year, isn't it? Which is that 450,000. Okay, so your movement is going to be a positive 450. And here we know to get our carrying value, we simply say your cost, yes, sorry, not cost, your carrying value plus your movement during the year is going to equal your carrying value at the end of the year. Okay? So, again, now we're working our way backwards. We know there was no depreciation, nothing, we didn't dispose of anything. So, we then say, okay, movement 450. So then our cost at the beginning, or our carrying value at the beginning, if you want to start there rather, work our formula backwards, would then be the 1,400,000 minus the 450 to get the carrying value at the beginning, which is also then the cost, because we know there's no depreciation that has taken place. Everybody happy with land and buildings? Right. So now we have to go to vehicles. And this is where things get interesting. Very interesting. Because here, they never told us. Did they tell us the cost of our vehicles at the beginning of the year, at 1 March 2018? They didn't, ne? They just gave us vehicles, and this is for 28 February 2019. 28 February 2019. Okay? But what did they also tell us about that? About vehicles? That asset that we disposed of, what did they say at the end? This transaction has not been recorded yet. So this 850 on the 28th of February, is it going to acknowledge that we actually disposed of a vehicle worth 440,000? Remember, it says this transaction has not been recorded yet. So in other words, in our books, we haven't yet recorded that we've disposed of a vehicle. So that 870, is it correct? What should it be? We're basically saying 870 minus 440, which then gives you what? 4? Okay, so that is the cost of our vehicles at 28 February 2019. Okay, right. So let's go down and insert that. So there we've inserted that. We're happy. Okay, but now we still need to calculate all these other things, isn't it? Okay, and you can work it either way. You can also say, let me actually start from the beginning of the financial year. Should we continue working our way backwards, or what do you guys want to do? We should start at the beginning. Backwards is fine. Okay. So we've got our 430, but we also know within our movements, we always need to calculate the depreciation that took place. We need to calculate if there were any disposals, which we know there were for vehicles. Okay. So we then say to ourselves, okay, cool, no problem. Right. We know that there was the addition of 450, isn't? With the asset that we bought. Sorry, not 450, 430. Okay, so we can plug that in. All right, and that remains a positive value. Now, in terms of the disposal, we know that the vehicle that we disposed of, the cost of it was 440, isn't? 1,000. And then we know that the total accumulated depreciation was 113,300, if I'm not mistaken, eh? So what is the carrying value? This is accumulated depreciation. This is the cost. What was the carrying value? Isn't here we have disposals at carrying value. So we need that. 326,700. So you see where it's coming from. Happiness there, sharp. Now we know we have depreciation for the year on vehicles, but we have 2 vehicles that depreciated in this financial year. we have the new vehicle, which we had from 1 September, I think it is, 2018. Okay. What did it say here? Yeah, 1 September 2018. So that was for 6 months. So let's do that calculation on depreciation there. Let me do it in orange. So 6 over 12 times, what was the value of this asset? 430, I believe. Yes, 430,000. Okay, and we know we are on the reducing balance method, but because there wasn't any depreciation prior, it's new, we know that we don't need to minus anything. So what is the depreciation there? 2,000. 21,500. Okay, sharp. This is depreciation on the new. Okay, we have already calculated the depreciation that took place in this financial year on the asset that we disposed of. I don't know if you want to call it old or the asset we disposed of, but that's what we're referring to. So we just need to go and find it. So it's this 29,000. So 29,700, isn't it? Yeah, 29,700. What is the total depreciation? Is it? Am I right here? 51,200. 51,200. Okay, cool. So now we have the depreciation on vehicles for the year. Is this 51,200? Let's see what we put in there. Voila, there's our, sorry, let me do that. Okay, voila, there's our depreciation for the year. So now we have our total movement. Can you see that? So we're saying 430, right? Use this color, 430,000 plus, sorry, well, yeah, plus a negative 326,700. So that's going to end up being a negative. You can even erase that. And then obviously you've also got a negative 52,100. What is our total movement? You're not wrong. It's this 52,100, isn't it? I also had to double check when I calculated. I was like, what? Wait, what's going on? Okay, so we now have our movement. Okay, now we need to establish, but what was the carrying value? Isn't we working backwards, isn't it? So we don't have this information, right? So we now need to establish what was the carrying value of our vehicles at the beginning of our financial year. Okay, now we know they told us that the accumulated depreciation, this is given. Okay, they told us here in the information, accumulated depreciation on vehicles 1 March 2018, 83,600. Can you see that? Okay, so if we go down here, we know that, okay, so here I left it at 28 February, but yeah, that's just the day before. So it's the same thing, but yeah, I should have changed the top part to, because remember our financial year begins 1 March. The previous financial year ends on 28 February, isn't? So this I should have had as like this. All right, okay, so there we go. There's our accumulated depreciation. And then we also know that, well, before we had, well, here they tell us, isn't? They tell us that we had 870,000 worth of vehicles. But we know this is without having recorded the disposal. So our disposal vehicle is in this 870,000, which is fine because we know that we had it at the beginning of the financial year. But now what we don't want is the vehicle that we actually purchased, because we know we only purchased that on 1 September 2018. We want to know what was the value of our vehicles on 1 March 2018. So in order to do that, we need to subtract the value of this vehicle that we bought on 1 September, isn't? Which we know was 430,000. So minus 430,000 is going to give us 440,000. Okay, right. I know you might have actually calculated that intuitively, but obviously I just need to show you so that you have no questions as to how did we get to this. So that's pretty much the value of the vehicle we actually disposed of. Can you see that? All right, at cost. So then accumulated depreciation minus your cost of your vehicles on 1 March will then obviously give you this 356,400. And then the totals column, I'm not even going to spend time on this because it's just adding what you have in those respective rows. That was your question 1. So yeah, here you're working for your marks. This test, but it was a good one because here it was a good assessment of, do students know their story? Simple and plain. But I think, guys, let's take a break. Then when we get back, we'll do question 2. It's only 2 questions in this paper. Question 2 is a lot shorter, or a lot more straightforward, should I say. A lot more straightforward. So they were kinda in the second half. But I really like the person who wrote this paper. I'll now explain further when we go to question 2 as well. Right.